reports, the 14th of November 2025. Okay, so what's in store for us? Okay, now today I'll discuss about the US government shutdown. Okay, so basically what happened, the shutdown was lifted. But the title of today's sharing actually explains the problem that we see, because whatever is happening is just congressing buying time, but only until January. Now, Congress has passed a bipartisan stopgap funding bill to end what became the longest US government shutdown in history. Now, in the Senate, the measure cleared 60 votes threshold with support from all 52 Republican senators and 8 Democrats. Now, the House of Representatives, called back into session by Speaker Mike Johnson, quickly approved the bill by simple majority, sending it to the White House for President Donald Trump's signature. So with the president backing the deal, the government reopens, federal workers get back pay, and critical data releases like jobs and inflation report can resume. But this is not a lasting solution. While this legislation holds the current crisis, right? It only fixes, it's a temporary fix, put it that way. The funding extension lasts until January 30th of next year, meaning that in barely 2 months, Washington could face another budget standoff once again. Now, the underlying fights over spending and policy, especially whether to extend expiring Obamacare subsidies, are unresolved, and the promised December vote on those subsidies is widely expected to fail. Now, Democrats are already furious at the small group of 8 senators who sided with Republicans, and there is every reason to expect the same standoff to re-emerge once this temporary deal expires. Now, one key difference, this shutdown ended under the pressure of Thanksgiving and year-end travel chaos. In late January, that seasonal political incentive to compromise will be gone, okay, raising the risk that the next showdown, if it happens, could be longer or nastier. Now, notably, lawmakers were under intense pressure to end the current showdown before the holiday, to end the current shutdown before the holiday season. Millions of Americans face mounting pains from 42 million low-income people seeing food aid delivered to air travelers hit by flight cancellations as air traffic control staff team. So with Thanksgiving travel approaching, even many hardline politicians balked at allowing chaos in the skies. Now, come late January, however, that seasonal urgency will be gone. A partisan brinkmanship returns without immediate incentive to compromise. The next shutdown episode could drag on longer or prove disruptive than this 43-day ordeal. Okay. Now, what it means for the stocks, for investors, the message from history is clear. Government shutdowns have had minimal lasting impact on the US stock market. Past episodes show the S&P 500 often flat or even positive during shutdowns, and this one was no exception. Wall Street did not panic. There was no major sell-off during the 43-day funding lapse, and if anything, stocks rallied on optimism once the deal to reopen the government came into view. Now, looking ahead, right, investors and analysts largely expect a repeat performance if another shutdown looms in January. This historical record suggests a new shutdown threat by itself wouldn't be enough to derail the market's broader trajectory. Now, of course, short-term volatility is always possible, and if stocks do dip around the next funding deadline, it will likely be due to other economic or earning factors rather than the shutdown per se. Now, that doesn't mean shutdowns are harmless. This one probably shaved around 0.8% points of quarterly GDP, roughly $55 billion in lost output. Now, federal workers missing paychecks and halted government services temporarily dampens consumer spending and business activity as well. Yet much of this is typical recoup once the government spending restarts. Now, ironically, a softer growth print can be even bullish for equities if it nudges the Federal Reserve towards easier policy and faster rate cuts. In today's market, bad news is good news whenever it brings cheaper money. Now, the bigger risk is not this showdown or the next one, but a pattern of chronic brinkmanship that eventually spills into something more dangerous like a debt ceiling crisis. For now, though, US equities have once again kept calm and carried on. Investors should probably do the same, even if Washington seemed determined to replay this drama in January. Okay? So that with that you understand what has just happened and what will happen. So stay calm. Uh, at the end of the day, logic does prevail. We look at the data, what it means, and then you look at the price. Is it following the data or is it going otherwise? Then you can have we can have a better decision making during that. With that, that's the report for today.